You recently wrote that you see downside for the dollar this month. Why is that?
Yeah, a few reasons. I mean, the first one, super simple as it gets. Seasonality is bad for the dollar in December. It's like the worst month for the dollar easily. So don't really want to fight that. Second of all, you are getting data surprises looking a bit better in the rest of the world. They're not bad. The data flow's fine in America, but there's that gap is converging. The third reason is now we've got the dollar trading roughly in line with rate differentials. For most of the year, it's kind of overshot them. Now they're in line, maybe even a bit below, depending on how you draw the chart. That seems a bit low to me. I mean, I think the dollar should be trading more cheaply than rate differentials suggest, because there's the headwind of valuations, there's a widening current account deficit, there's better growth prospects elsewhere in the world. So that's the tactical view. Into next year, it gets a little bit more choppy. You're really relying on euro, yen, CNH, some of these big currencies to really take the trade weighted dollar lower. A few things need to change for that to happen, but we think they will.
That's what I was going to ask you. I mean, I'm looking at the dollar index down about 8.5% so far in 2025. We've just got a few more weeks to go to wrap up the year. But having said that, in terms of what happens to the dollar in 2026, Tim, is it more about U.S. fundamentals or U.S. developments, or is it more about overseas developments, other country developments, in terms of what happens, whether or not the dollar is stronger or weaker?
Yeah, I think it's about those other countries, because I don't think the dollar performance of the last few months, which has been better, is really the market saying, hey, the dollar looks great. If the dollar looks so great, gold wouldn't have shot up well above 4,000. You wouldn't have had the Scandi currencies keep going. High carry currencies like Brazil and Mexico have kept going. I think people do want to sell the dollar. They're just saying, am I so keen on selling it against yen and euro and CNH, those other big currencies now? Not so much.
What's the scuttlebutt about the dollar? And I think there's been a real rethink, right, with this current administration and just seeing some of the policies. And I think people are more nervous about what's to come still in the administration, or what is really the future role of the U.S. globally. So is there really a substantial pushback on the dollar? I mean, you certainly have, like, I hear what you say about gold, and we've talked about that a lot this year at Bloomberg, but I'm just curious, is there, when you talk to other folks who are watching the currency markets, your own team, that people are really looking to pull back?
Yeah, not really. Nothing like June quarter into the third quarter, right? Liberation Day's passed, the Trump shock's gone. Turns out that, well, he'll roll back a lot of the more extreme stuff. But even so, it's fair to say that the economies generally have handled the tariff shock you have had a lot better than people thought.
Right.
So now it's very much is the dollar just overvalued? Are there better options elsewhere in the world? Other countries often are easing fiscal policy. They've eased monetary policy more.
Yeah.
You can actually get a bit of carry out of other currencies. Aussie, Norway, the UK offer more yield than the US now. So it's more like it's not that the US isn't a tough
It's a differential?
approach. Yeah, it's a differential. It's exceptionalism by definition is a relative term. And it's not that the US is bad, and it's not that US policy is particularly tough. It's just that the rest of the world is now converging up to US levels.
I think Talia is going to kill me when I ask this question, but she's in there and I'm out here. So I'm going to do it. But I host a show on Bloomberg about crypto. So I always look at FX through the lens of cryptocurrencies. And you mentioned gold and the attraction that gold has had this past year. I'd be remiss if I didn't ask about how you view Bitcoin specifically. People argue this is digital gold. It's borderless. Is it on your radar at all when you're thinking about FX and the moves of FX?
Yeah, it's there. We've got to think about it a little bit. It's not something we actively cover, but yeah, it does occur to me that there's perhaps going to be a market there, right? I mean, this gold rally we've seen in the past year or two, it's fair to say that a lot of kind of fundamental long-term investors around the world have been caught short there, right? I mean, gold was this asset where, hey, it offers no yield. My economics course told me it's a waste of time. I should be in stocks or bonds. And I think a lot of people have been squeezed in around the world, like, now we need some gold exposure. I mean, all things equal, you'd say maybe they get squeezed into some Bitcoin exposure in the medium term.
What about stablecoins in your world and the idea that these are used for cross-border transactions more so than other currencies? Does that matter at all?
Yeah, look, early stages there, plenty of uncertainty, new technology. I don't claim to be an expert. I'm not sure that anyone's really an expert, but it does seem like...
They'll tell you they are. I can find some people who...
I'm sure you can.
And they're usually in the crypto industry.
Yes, well, heck of a coincidence. I do think that's probably going to help the dollar's role continuing,
Really?
right? I think so.
Yeah.
Like you're gonna want the dollar. It's tied to the dollar. You're gonna need treasuries to be in that market.
I was just
right?
going to say, I mean, it's great for treasuries.
Yeah, exactly. So look, it helps the dollar. I just say, like, that doesn't make me medium-term bullish on the dollar. That just means our dollar forecasts aren't that negative. The dollar's very expensive any way you cut it. Our forecasts have it getting down to something closer to a long-term average, not below average. So things like stablecoin, the US having energy self-sufficiency, the US and its defense sector, the US and the AI advantage, all that means, look, we're not heavily negative the dollar. It's just from these lofty starting points. It's a bit tougher to be upbeat.
I am also curious in terms of the midterms next year. Do you think that is something that could change kind of the fortunes for the U.S. currency come next year? I know it's not until late; it's almost a year away. But is that seen? I mean, we certainly are following it as a vote on the current administration. But I'm just wondering if there will be a rethink depending on how that plays out and the impact on that on the currency markets and the dollar in particular.
Yeah, look, I think it's going to.
It's far away.
Yeah. It's. I think it's definitely going to have an impact on the economy and how policymakers want to run the economy. There's no question about that. So, midterms coming in, they're going to be close. Would you be more bullish on the equity market or the economy? Sure. How does that translate to the dollar? That's where I've got a big question mark. And I think there's an anchoring going on in the market here where the US economy and stock market last year, the year before, were good and the dollar was good. But in the very long run, kind of works the opposite way. If the US economy is good because of easy policy ahead of the midterms,
right,
and if the equity market's good, probably the rest of the world's doing pretty good too, with a higher beta. And the market's saying, actually, we can get some cheaper options if it's the equity market. We can get some underappreciated, undervalued sectors or fixed income markets elsewhere. So I don't know that really translates to dollar demand.
Favorite currency at this point?
It's my home country, Aussie. It's finally starting to show some light the last few weeks. I don't always have that bias.
How long did you have waited for that to become your favorite currency?
It's been it's been like that for a while. All year I've heard from clients, why is Aussie so cheap? It's been a puzzle in the market.
Yeah.
Now we're starting to see some of that value realised. Otherwise, it's hard to go past where you can just get some easy carry, some high interest rates, Brazil, Mexico, Eastern Europe. It's pretty tough to go past. In a low vol environment where equities are fine, I'll just pick up those high interest rates.